All right, in this training video, we're going to take a look at the Great British Pound Canadian dollar. We're going to look at the developments and the setups in between different time frames. The time frame that I'm looking at right now is the weekly chart. What we want to notice on this chart is number one, we have our apex bar right here. So if we take a look at the low of the apex bar, set this up right here. The next bar, which would be in this case it would be last week. By the way, just for time reference, today is March 12th, 2015. It's about 10 minutes after 11 Mountain Daylight Time. But we've got our setup bar right here because we broke the low of our apex bar. This bar, our current weekly bar right now, it broke the low of our setup, which was last week. Broke the low of that. So on a weekly time frame, we now have developed a down leg. So we should, for the rest of this week, today's Thursday, well actually tonight is Thursday, we're going to be going into Friday's New York session. So we should see a continuation of price moving down as we finish out the week. But we've got a complete setup that's developed here on the weekly chart. And so what we're going to be doing is we're going to be scaling it down so we can identify entries either on the daily, the 4-hour, or the 1-hour chart. So we know that a complete setup has developed on a week. And what we want to identify for the strongest confirmation that we can have is the alignment in between different time frames for a trade setup. So earlier this week, we had price break the low of our setup bar. So on a weekly chart, we are in a down leg. If we take this down to a daily, right here is going to be the apex bar that was on the weekly. This would have been the setup bar if we would have caught it here. This one would have been our entry bar. So we were on a down leg on the daily, but on the weekly, it did not happen yet. Now, we take this down leg right here, which is a price dominant leg, and then we take this correction right here. This is our time dominant. Right here's our Nadir bar, this one right here. Off of the high of the Nadir, we have 1 new high, 2 new highs, 3 new highs. On average, your corrections, your reactionary legs, or your counter trends, you're going to have 2 to 3 new highs off of your Nadir or your apex bar, depending on which direction price is moving. So we have our up leg, and now we are currently in a potential setup for a brand new down leg. And here's where it comes from. Right here is our apex bar. This is our setup bar. If we break the low of yesterday, then this would be our entry bar, and we would go ahead and sell. So I've got a sell order, a sell stop order, pending order, below the daily low. That way I know if I get triggered into it, now we have an alignment on the weekly for a down leg, and now we're continuing we're developing a brand new leg or a second down leg off of this overall down leg, which is going to be an alignment. What we can do then is we can take the same format onto a 4-hour chart. Right here's where we've got our Nadir bar. If we break the high of that Nadir bar, then we can have a potential reactionary leg or counter trend leg. And what we would be looking for then, let me zoom in on this. is we would look for a similar pattern that we had seen on the daily. And I'll go back to that so we can look at that. We're going to be looking for this up leg pattern of seeing 2 to 3 new highs off of the Nadir bar in the reactionary leg, waiting for our primary leg or down leg to be able to develop. So if we got our Nadir bar, if we break that high, this would be what we would consider our setup bar. This would be our entry bar. This would be the first high off of the Nadir's high. Here's the second high. Here's the third high. If we do get 3, we may not. We may only just get 2 new highs, and then we may have the development of price going back down. So the scenario could look like this, where we get 1, 2 new highs off of the 4-hour chart. As it peaks, we get our apex bar, we get our setup bar. We would be triggered into a sell order at the low. Well, actually, it would be, let me flip this back over. We would be at the price of roughly 88.53. So let's take this back over to the 4-hour chart. Price of 88.53. Oh, right there. So this is where we're putting in our sell order based off of the daily chart. So we can take a reactionary leg, look for 2 new highs. We might have 3 new highs, and then start to look for a development here on the 4-hour chart. We would look at the apex bar. Here's the setup bar, and then go ahead and place your well. And I'll explain this a little bit more in here in just a minute. But we could put a pending sell order below that, or we could get triggered into that. The only thing that some traders would look at is how close we are to support back over here versus where we're getting into a trade. So on personal preference for a trader, whether you would take this or just wait to put a pending sell stop order below that daily low from yesterday and trade that. Because what if price doesn't break this low and it comes back up, and now you're selling at the bottom of what a potential reversal could be. So that would be something to just think about as we're looking into it. But if we just look at the overall structure of what price is doing, where's the prevailing trends, where's the counter trends, or the reactionary legs, then we could scale in to this trade, not over leveraging yourself, but being able to just place multiple orders. And the same thing can happen on the 1-hour chart. We can switch this to a 1-hour, and then we can look for price to come up, create the reactionary leg, and then we can go ahead and we can sell off of the setup for that would look just like this on a 1-hour off of the apex bar. Got the setup, and then you get your entry bar. Those are going to be a few things that I'm looking at on this instrument. On a fundamental side, I want to identify what could be the catalyst that is going to create price to move in a significant and a strong enough direction to determine whether or not price will continue to head down, or if price cannot break support down in this area and price heads back up. Being that we're trading the Forex, the catalyst for Forex is always the news. 6:30 Mountain Daylight Time, we have 2 news announcements that's coming out for the Canadian dollar, which are high impact. We have the unemployment change in the unemployment rate. So tomorrow morning, going into the New York session, those 2 news announcements, they could be the catalyst that could drive price down if we're going to continue to get weakness on the Great British Pound. So those are a few things to think about. We'll discuss another scenario like this in another training video. Thank you.